Bitcoin price will only go one way, and that is up. The question this time around is, what will the price be by the end of 2025? In today's video, I'm going to break down everything that is currently going on with Bitcoin and why I'm super bullish on where the price is going to be over the next 12 to 18 months. Stick until the end because I'm not only going to give you my price prediction, I'm also going to share the price predictions of some of the biggest investors in the industry. Trust me, you're not going to want to miss this. My name is Karim. This is my third cycle, and I made my first investment in Bitcoin back in 2017 when it was hovering around $1,000. If you're serious about watching your portfolio grow, then you cannot ignore what is about to happen with Bitcoin. So Bitcoin is finally mainstream, and it's become a household name. As it continues to grow in terms of market cap and adoption, there are high-level topics that we need to address to understand how and why Bitcoin will be one of the best performing assets of our generation. So in today's video, we'll look at 4 key points that will help you understand why. We'll look at number 1, how Bitcoin is an emerging market asset and why that's important. Number 2, we'll look at global liquidity and why Bitcoin is sensitive to it. Number 3, we'll look at how Bitcoin is a hedge against inflation, not only in US dollars, but even more so with other currencies in countries like Pakistan, Egypt, Lebanon, Venezuela, where inflation is running wild. And finally, number 4, we'll look at how Wall Street and massive funds are currently buying Bitcoin. So in this video, we're not only going to talk about price. I want to bring up different aspects and topics to let you think about Bitcoin in completely different ways. So first up, Bitcoin is an emerging market asset. But what does that exactly mean? Well, first, it's not controlled by the US. Second, it's not a company, so it doesn't have a CEO, it doesn't have revenue, dividends, or any of that. So it's not subject to risk of businesses or human failure. Third, unlike gold and other commodities that are supposed to be rare, Bitcoin actually has a finite and capped supply. And finally, we're seeing countries and governments like Russia, UAE, Argentina, and many others spend government funds and resources to mine Bitcoin. And next up, we need to understand how and why Bitcoin is sensitive to global liquidity. So when central banks like the Fed or the European Central Bank inject liquidity into the system, Bitcoin tends to soar. And when liquidity dries up, it struggles. That means Bitcoin is a liquidity sensitive asset. So first of all, global liquidity essentially refers to the ease of accessing money and credit. Central banks control this by adjusting interest rates, but they also use tools like quantitative easing or increasing the money supply, or what we know as M2. So for example, in 2008 or during COVID, central banks pumped a lot of liquidity into the system just to keep the economies afloat. And this created an environment where people had more money to invest, right? And a portion of that found its way into assets like Bitcoin. And second, Bitcoin has behaved as a risk asset, right? And what that means is basically that Bitcoin behaves more like a high growth tech stock than it does a traditional safe haven asset. Investors view it as an asset with potential for massive returns, which is why they flock to it during times of abundant liquidity. So when there's more money available, they'll go to higher risk assets like Bitcoin. And this is exactly why Bitcoin surged in 2020 to 2021. The Fed injected trillions of dollars into the economy. People had more money to put into riskier investments, especially Bitcoin. I mean, I've seen it do a 70x over the past 7 years. That's an incredible return on investment. Can you think of any other asset that's performed as well as that? And it's not over yet. But on the other side of the coin, liquidity tightening will often bring down Bitcoin's price, right? So when central banks begin to tighten liquidity by raising interest rates or pulling back on quantitative easing, access to cheap capital shrinks. But when this happens and in this environment, investors tend to move away from speculative assets and they go towards, safer, less volatile investments. And this is exactly what we saw when the Fed raised interest rates in 2022. This put pressure on risk assets across the board, including Bitcoin, as investors moved to cash and other conservative assets, like bonds. And finally, it's worth mentioning Bitcoin's inverse relationship with the US dollar. So when liquidity is high, the dollar weakens, which tends to push up asset prices, including Bitcoin. But conversely, when liquidity tightens and the dollar strengthens, it exerts downward pressure on Bitcoin's price. So in an easy to digest summary, the significant long-term correlation for Bitcoin are a negative correlation with the US dollar and a positive correlation with money supply growth. And what we're seeing finally this year is that the Fed is now pushing towards money supply growth, which is very, very bullish for Bitcoin. And next up, we'll look at how holding cash of any kind is literally becoming a liability and not an asset. And people are waking up to this. We've learned so much about inflation over the past few years that it has literally affected every single one of us, regardless of which country we live in. I mean, governments around the world, especially the BRICS nations and the global south, are adopting Bitcoin simply to de-risk the fiscal irresponsibility we've seen from the US. So we now know inflation is real and the cash that we hold has proven to lose its value over time. This is true not only with the US dollar, it's also even more true in countries like Egypt, Lebanon, Venezuela, Pakistan, and the list keeps going on. And actually, did you know when we account for returns on traditional investments like stocks and bonds, we also have to take into account the inflation rate, right, over time. That's the only way we can assess the real value of what that investment is in the future. And what's crazy is that over the past 10 years, the growth rate of the M2 money supply has grown by an average of 7%. Actually, many experts believe that this is an accurate representation of the current US dollar inflation rate. But what does that mean? Well, essentially it means that you have to be investing in assets that perform better than 7% every year, and that's just to cover inflation. So why would the US continue to print 7% more dollars every year? Well, there's several reasons, but the main reason is to finance its own debt. The level of debt that the US is now in is honestly beyond comprehension. It's so bad that I just have to read these figures out to you. The US national debt currently stands at $35.8 trillion. This means that every citizen in the US owes around $106,000. That includes every baby. This also means that every year the US has to pay out interest on that debt to the tune of $1.2 trillion, which is 13% of their federal spending. In 2024, these interest payments, by the way, are expected to equal 3.1% of their GDP, one of the highest proportions in recent history. So yeah, what does that mean? Well, it means that the US dollar and fiat in general is losing its value, and the whole world is waking up to this. And finally, let's look at how Wall Street and some of the biggest investors in the world are accumulating Bitcoin, and whether or not actually there's a correlation between how stocks perform and how Bitcoin performs. So an interesting fact that I read from Van Eck is that over a 10-year horizon, the NASDAQ correlation with Bitcoin was around 0.19, which is quite low. But over the past 3 months alone, it has been 0.5. That is a 2.5-year high. Guys, if you're enjoying the content of the channel, please do me a favor and hit that like and subscribe button. It really helps us and the team to continue making more videos for you. So how is Wall Street going to become the catalyst for the next Bitcoin pump? Let's start with our friends at BlackRock. It's no secret that BlackRock, Vanguard, State Street, and JP Morgan are accumulating Bitcoin. And these are some of the biggest investors on the planet. And you can argue that these institutional investors turned companies like Apple and Tesla into trillion-dollar companies. And so with that same logic, I believe Bitcoin will become a multi-trillion-dollar market cap because of the backing and investments of these same institutional investors. And on top of that, you have people like Michael Saylor with MicroStrategy proving that holding Bitcoin on company balance sheets is a strategy to really hedge against inflation, and every company should be considering this. And then if we combine all of this together, I actually think a 9 or 10x is very achievable. But the biggest question then becomes by when, which leads us to what you've been ultimately waiting for in this video. And if you're still here, thank you very much, because you're about to find out my price prediction. So let's get right into Bitcoin price predictions, not just by me, but by some of the smartest investors in the world. So are you ready? Let's go. So let's start with Van Eck, a global asset manager with over $100 billion in assets under management, including a Bitcoin ETF under the HODL ticker. I like that. They predict Bitcoin's price to hit $180,000 by 2025, and they also predict that Bitcoin will hit $3 million by 2050. I know that $3 million could sound like a joke, but these are the money guys talking. Tim Draper has predicted that Bitcoin will reach $250,000 by 2025. Kathy Wood from ARK Invest predicts Bitcoin will hit $1 to $1.5 million by 2030. And Michael Saylor also predicts Bitcoin to hit $1 million by 2030. And what about me? Well, I definitely don't fall into the category of these prolific investors, but I am as bullish as they are. And my personal prediction is that Bitcoin will hit $150,000 by 2025, and I have conviction that it'll hit $1 million by 2030, which will be a 14x in the next 6 years. So I know what you're thinking. Are we late? I personally don't think you're ever too late to start investing in Bitcoin. I do think that we are now at a significant point. We're going to see a combination of global liquidity and institutional investors pumping at the exact same time, which is going to be a catalyst for Bitcoin's price to skyrocket. And one thing I truly believe in is everyone buys Bitcoin at a price they deserve. So in short, now is the time to be accumulating Bitcoin, because one thing is for certain, Bitcoin's price will only go in one direction over the next 10 years. So there's a couple of things that I'm considering as well in my reasoning on why I think Bitcoin is really going to skyrocket in the next year. The first one is we've seen it choppy over the past year at 60 to 70K, which is, a great indication of accumulation among a lot of the investors and retail investors as well. So I'm really bullish on what's going to happen next as it continues to trade at the same levels over a prolonged period of time. Another thing is that I look back a little bit on history. We saw that, in 2016 was a recovery year, which meant 2017 was the bull run. We saw again in 2020 was the recovery year, and 2021 was the bull run. And then again now, I feel like 2024 is the recovery year. And hopefully, if that all adds up, 2025 should be the bull run. And something else that I found really interesting is when we first started investing, me and my peers in 2017, we would always be thinking about the price that was coming in the next month or 6 months, because it was still a speculative asset, and we were still like trying to figure out where Bitcoin would be in the global landscape of assets. But today, when I sit down and discuss Bitcoin with my peers, in 2024, we're now hearing people talk about 10 years, 20 years down the line. I mean, you even heard the predictions for 2050, right? So these people are actually putting models together. Huge investors are putting models together to say, if Bitcoin appreciates 16% every year, what is that price going to look like 2030, 2040, 2050? And I find that very interesting that we're now looking at this in terms of decades rather than, next month or 6 months down the line. And I know what you're thinking, but Karim, there must be some risk to this. There must be some risk to Bitcoin. It can't all be rainbows and butterflies. Like, what are some of the risks? Of course there are risks, right? Bitcoin is a tech angle. It's a tech play. And so with every tech, there's software, and software could potentially get a bug. And what if that cap of 21 million ever gets jeopardized? So there's that risk. Another one could be that countries could throw high capital gains taxes on it. They could regulate it heavily, making it very difficult to on and off ramp. So yes, these risks do exist. But at this point in time, I do think that these risks are very, very low. I mean, I think Bitcoin is now a global asset, and there will always be a way to invest in and cash out when required. And obviously another risk could be a recession happening in the economy, a big depression happening in the economy. That could slow down, I think, Bitcoin's price action. But overall, over the next, long term, I still have high conviction that Bitcoin's price will do really well. So what do you think? Have you started investing? What do you think the price is going to be by 2025? Let me know in the comments. And guys, if you want to read more about Bitcoin, we launched our flagship ecosystem product, ICN.live. It's a brand new and fresh Web3 news platform where you'll find articles in gaming, AI, blockchain, and of course, Bitcoin. And if you're interested in receiving great insights and market updates straight to your email, subscribe to our newsletter. It's right there on the website. You just need to put in your email. Thank you very much for watching. See you next week.